Hey guys, welcome back. Kaila Lindsey here. Make sure you're liking and subscribing and click that little button to let you know when new videos are coming up. We're going into some pretty cool multi-part series that are gonna help you guys run a successful real estate business, get more leads, be heavily into your revenue and understanding how all of that works so we can actually increase your financial future. So today we're gonna piggyback on our last video having to do with your business buckets in your business banking account, but now we're gonna talk a little bit more about how to connect them to your personal accounts. So how do we go ahead and connect our business accounts to our personal accounts? Now, if you guys logged in and watched the last video, it's not too long, it's about 12 minutes, take some notes and make sure that you get your account set up for your business banking. Now, once that's been done, you would end up with a few accounts. You're gonna have your financial freedom account, taxes, profit, your education, and your operating expense account. Now, what I do want to express to you is this is a start. You could have way more accounts than you want, right? You can create a little fun account. You can create an account that when you get enough saved up, you take your team or you go X place for a nice little outing with your team or your company or your organization. You can do whatever you desire. But by starting with those, my basic, I guess you could say, coaching that I would give you on that is just to make sure that you're always separating out your funds. You do not want one giant lump of money because it's gonna look like you're profitable and you're really not because you're actually hiding it from yourself. So how do we best utilize and connect this to a personal banking account? Now, when I first started in real estate, my husband actually worked for a corporation, so he was not self-employed. So our personal banking account had all of his funds. Everything that he made came into our personal banking. And from there, we would split things up. Now, here's the thing. I am getting more and more educated every day on the things that I can and cannot write off. And when it really comes down to it, you can write almost everything off in your business. That's right. You can write off gas. Sometimes you can write off your vehicle depending upon how you do it. You can write off your cleaning, house cleaning, your landscaping. My dogs, in my particular instance, and we'll talk a little bit about tax write-offs in a future video, but there's a lot that can be written off. So what we've started to do is most of the expenses we have, we tie right into my business account and we pay most things out of there. Now, whatever amount you want to put into your personal accounts, here's how I recommend doing it. One, you can either take your lump sum of your financial freedom account and pull that amount monthly over into your personal account, and then from there, divvy out where you want it to go. The other option is you create another sub-account in your business account that is called executive compensation. So you have financial freedom, then executive compensation. It could be maybe 5 or 10% of the overall for the month, and that is what gets pulled over to your personal account to pay for your mortgage, to pay for, grocery bills, things like that. There's really only 2 or 3 things that you would pay. Healthcare, that's about all you'd really pay out of your personal. However, you may have home projects that you want to do, right? And you don't want to necessarily pay them directly out of your business banking account. So instead, you move that over to your personal account and then you start divvying it up, right? We're going to put this much into whole life. We're going to put this much into floors. That's our next thing, new floors. We're going to put this much and we're going to start saving for a new kitchen. And you do it the same way, right? So each of those accounts, including an emergency account, because you should always have emergency savings up to 6 months of necessities. I did not say going on shopping spree kind of money, necessities. Mortgage, food, gas, those are necessities, okay? Has 6 months savings of that. And the way that you fill it is, let's say it's 5% for, new floors, 15% of the executive compensation. So you've got your, let's say $1,000 comes in for executive compensation, right? That was your bucket over here in your business account. Goes over to your personal account. Now you have that $1,000 right here. From that, you put 5% into new floors, 10% into emergency savings, 4% into this, 50% into this. So it could be a vacation you want to take. All of those things should be subbed out. If you have projects that are going to be costly, you need to go ahead and list it out. If you know, let's say for us, it's 4 years from now, 3 years from now, but on our 10-year wedding anniversary, we're going to have a blowout party. Guess what? We're going to budget for it. Budget doesn't mean look in the future, say we're going to need that amount, let's hope we have it. Budgeting means you consistently put an amount away until you hit what you're looking to save. So for the emergency account, you're going to keep filling that till it hits the number that you're looking for. And once it does, the money you were putting into it, redistribute it to the other funnels, to the other buckets. So what you need to sit down and do is clearly lay out what those buckets look like. What are you going to have in your business? What are you going to have in your personal? Here's the thing. There's a few things that are question worthy, right? And you might be asking me, well, which ones do I pay in my business? What do I pay in my personal? I'll make it really simple. The only things you should have to pay out of your personal accounts are your mortgage, your car, if you buy a boat, let's say, if you buy new clothes, some of them, if you buy new clothes, your health insurance, that would be another one that would be in there. Pretty much it. Everything else comes out of your business. Now, some people get really tripped up with this because they're like, well, technically it's for personal and I'm not, it's not really helping me with my business. I went on that vacation, but the vacation, it was my vacation. I didn't work on my vacation. Let me stop you right there. If you understand how to play the game, you can become very wealthy. I'm teaching you how to play the game. The game is played by paying for things before taxes. So let me give you a quick scenario. If you're a W-2 employee, let's say you make $100,000 a year. Great job. Make $100,000 a year, and then you pay for your gas, your groceries, date nights, new car, pay for your vacation that you're going on, healthcare. You go ahead and take, put a 25% down on a new rental that you're purchasing. But here's the caveat. You paid $100,000. What you received was after taxes. So yeah, on paper it says you made $100,000 that year, but guess what? A good 35 to 40% of that, depending upon what kind of career you're in. If you're in sales, they take 40, sometimes 50% of your commissions. That's right, 40 to 50% of your commissions go to taxes because it's seen as a bonus, right? If you're salaried, best way to go on a W-2. So here's the thing. All of those taxes were paid before you got your paycheck, which means you don't have $100,000 to spend. No. You have probably closer to $70,000 to spend. It's a totally different number, right? So let's look at a different scenario. Person over here, you're a real estate agent or someone who's a 1099, you have an LLC, you have your bank accounts all set up, right? You're paying yourself a small salary, and that's what's getting taxed, right? Not the $100,000, you're paying yourself $35,000, and that $35,000 is being taxed at a much lower rate. Now, you have that $100,000 in earnings. And out of that, you're gonna pay for your mortgage, you're gonna pay for this, you're gonna pay for that, you're gonna pay for this, you're gonna pay for that, you're gonna pay for this, you're gonna pay for that. Then they calculate the taxes. Now I said mortgage, I should re-edit that or take that out. Pay for your rent, let's say that, the rent on your office. So rent on your office, your phone bill, cleaning people, vet bills, the vacation that you took. It's all spent there. Then the IRS takes out the taxes. The IRS is taxing you on your profits. On your profits. If you spent a bunch of money, there's not as much money left over to be taxed. So while this person over here is being taxed on the full $100,000, this person over here might only be taxed on $35,000 because that's all that's left. You want to be a 1099, but you want to do it the right way. And you want to spend as much as humanly possible on the business side versus the personal side, because most of it can be written off. That's why you don't need a huge chunk to come over to your personal banking account, because you're really only paying your mortgage, car, boat, clothes, things that are not tax deductions. There's always a way to deduct on taxes, guys. Go read the book, Tax-Free Wealth, for any kind of background on that. Now, I brought up in my last video a car. In 2021, if you purchase a vehicle at 6 tons or more, you can get 100% tax write-off in this year, meaning you take the entire write-off in the same year. Now, we had a pretty great year, and I was pretty excited about that. Turns out, much of the other ways in which we spent are actually gonna do more good than the car, so we could pull that out over 5 years. But here's what that would have looked like. We could take the tax deduction here of $95,000. So off of what we made, $95,000 was spent, Now the IRS sees we made this. Then we got another vehicle. Now the IRS sees we made this, right? So we're getting the deduction here, but monthly I'm paying for the monthly bill to pay off the car note out of my personal. See how that works? If you've got questions, drop them in the chat box. So one other cool fun write-off, because I'm sure you're saying, well, how do I do vacations and get my company to pay for it? Here's the IRS rule. You must work, in order to write off a vacation, you must work 50% of the time that you're there. However, how do they calculate 50% of the time? Well, first off, your travel days count as business days. That's right. So for your travel days, that means, let's say you went from a Saturday to Saturday, you traveled Saturday and you traveled Saturday. Great. So now we're left with 5 days. Actually, you probably traveled Saturday and Sunday. Anyway, so now you're left with 5 additional days. All right, out of 7. So now we got to find 2 more days that we can go work. They didn't say full work days. So for us, when we go to the beach, we'll reach out to an agent, or I myself will schedule a time to go to an open house or to schedule a date to go and do a walkthrough on a property. And honestly, we're looking for another property out of the beach, so we'll go do a walkthrough. And then I'll also do a presentation to one of my friends with regards to real estate investing, or we'll have a meeting there because I do have friends that invest with us, and we'll discuss that almost like our own little fun beachside retreat. Guess what? That counts. Now your entire vacation can be written off. The travel to get there, the rental that it took, right? We rent a beach house every year. Write off. We travel there every year. The food that we eat while we're there, write off. All of that is a write off. And it's all coming here before you're taxed. So make sure to understand tax code and get a phenomenal CPA. I highly recommend King's Tax and Accounting. We can drop their information below, give them my name, and you will get a discount. But yeah, it's absolutely amazing to understand how you do this. So make sure when you are making your buckets, you do the same thing in your personal account, and any projects you want to complete that need money to do it, create little sub-accounts. It's not hard to do. You can do it for free with most banks. So I hope you guys got a little bit of knowledge out of this. Go make your bank accounts, guys. Go make your sub-accounts. It will save you in the long run, and the reason it makes you more money is because it prevents you from spending and stealing from yourself, and it'll allow you to invest. Don't forget to like and subscribe, and I'll see you on the next video.